Good afternoon, and welcome to this next episode of Governance Headlines, a sister program to Governance Dialogues that I have the pleasure to host, to discuss governance priorities that arise based on emerging developments we see in developed and emerging markets that impact on corporate governance. And in today's episode, I would like to speak to you about stock exchanges, and specifically the structure of the stock exchange industry and the impact that stock exchanges have on corporate governance of listed companies, of issuers. And the restructuring or the history of the stock exchange industry is actually fascinating, and something that I've started looking into over a decade ago, looking at first with the structural changes that we've seen in the early 1980s that started in Sweden with the first ever demutualization of a stock exchange, the Swedish stock exchange, and the wave of restructuring of stock exchanges that followed with a view to bring them from government to private ownership. And since in the 1980s, since that first episode, most stock exchanges around the world have demutualized, they have privatized, and now all of the large stock exchanges around the world operate as for-profit, self-listed entities. And that includes in the last few years, that group was also joined by the Tokyo Stock Exchange. But again, most other exchanges in the developed world operate according to that logic, which at the time, of course, of that restructuring raised questions about the incentives of stock exchanges in upholding good corporate governance, given that they themselves have become self-listed and private companies with their own shareholders and their own bottom line to look at. And we've seen as well in this industry an enormous wave of competition, not only between the stock exchanges themselves, which, as I said a minute ago, have become for profit, but also with the alternative trading platforms and the multilateral trading venues, which have blossomed enormously since about 20 years ago, when the exchange industry has started to really speed up in terms of its pace of its own restructuring. And that has had a fundamental impact on corporate governance of companies, on the role of stock exchanges in setting the rules of the game, but also in enforcing the rules of the game. And what we're seeing today is a sort of increasing momentum towards stock exchanges in emerging markets transitioning to private ownership. And today, in today's episode, I wanted to in particular to highlight some of the Middle Eastern exchanges that are continuing to sort of move in that logic and joining the restructuring, or the group of exchanges that have restructured in the past. And that now includes countries like Oman, where the Oman Stock Exchange is looking to transition to private ownership, and as it was announced earlier this week, now also Saudi Arabia, where the exchange used to be, or still is, for the moment, government owned, but will soon be transitioning to private hands. And that, of course, underscores an important trend in emerging markets, where stock exchanges so far have been conceived more of state-owned companies, and with serving a particular financial sector development objectives, as opposed to being privately owned companies. And that, I think, marks a very important transition and an interesting transition in the stock exchange industry towards this sort of private ownership model, which, as I said, will have a definitely impact on corporate governance of issuers. At the same time, what we're continuing to see as exchanges are privatizing and liberalizing is, of course, the consolidation in the industry, sort of the large exchanges buying out the smaller exchanges, and that also having an impact on competition for listings, which have intensified enormously, notably between the London Stock Exchange and the US markets, in particular following the Brexit the Brexit decisions, and that certainly will, I think, affect the quality of competition and also the kinds of companies that the LSE and NICE are able to attract, whether they're able to attract some of the state-owned companies that will be coming to market from emerging country jurisdictions, notably, is a big outstanding question. And with that consolidation, what we're also seeing is stock exchanges like Deutsche Börse, for example, acquiring institutional shareholder services, which is a corporate governance data and ratings provider, which also raises interesting questions around potential conflicts of interest and the growth of exchanges as not only avenues for listing and disclosure, but also as potential owners of ESG data and information. And I think that marks also an interesting new chapter in the world of exchanges. And so I think that the point of today's episode was really to highlight the ongoing consolidation in the industry, the ongoing liberalization in the industry, which now includes emerging markets, but also the consolidation of stock exchanges from a perspective of horizontal growth into the ESG space, which is being pursued quite actively, as I said, with the Deutsche Börse acquisition of ISS, but also the acquisition of Refinitiv by the LSE and others that look likely to follow. So with that thought, I will leave you today to think about the future of exchanges and their role in corporate governance in this new environment, both in developed and emerging markets. Thank you for joining us today.